Listen, I know what you're thinking right now. You just watched silver and gold absolutely tank, and you're wondering if this whole precious metals rally was just one big trap, right? Well, let me tell you something that might surprise you. I've been tracking these markets for over 25 years, and what happened today? It's not the disaster everyone's making it out to be. In fact, let me show you why this pullback might actually be one of the healthiest things that could happen right now. But first, there's something about the current silver price that almost nobody is talking about. And when you hear it, your entire perspective on this sell-off is going to shift completely. So here's the deal. Silver just dropped hard. We're talking a sharp, ugly decline that had people panicking across social media. But here's what's wild. Even after this brutal sell-off, silver is still trading near the highest levels it has ever reached in its entire history. I'm not exaggerating. Do you realize that silver has only spent literally a handful of days above the current $70 range in all the decades we've been tracking this metal? Think about that for a second. Everyone's freaking out about the drop, but we're still sitting at historic highs. Now, I know that doesn't make the pain go away when you watch your portfolio value shrink in real time, but context matters here, and the context is absolutely critical. Just weeks ago, people were celebrating, talking about silver hitting $85, maybe even $90, especially with reports coming out of China and Dubai showing even higher prices in those markets. But here's the truth. $70 silver is already extraordinary. So why does it feel like the sky is falling? Because humans are emotional creatures, and when something goes down fast, we panic. But let me walk you through what's really happening here, because once you see the bigger picture, you're going to understand why some of the smartest investors I know are actually seeing this as an opportunity rather than a catastrophe. Now, before we go further, you need to know about the technical side of this, because that's where things get really interesting. Analyst Craig Hemke pointed out something crucial. We saw what traders call an ugly candle on the charts today. That's technical speak for a sharp down move that looks scary. And here's the key level everyone's watching: $70 per ounce. If silver breaks below that, we could see it slide into the $60. But hold on, even the $60 would still be incredibly strong compared to where we've been historically. This is what most people don't get. They see a drop and think it's over, but pullbacks are completely normal, especially after the kind of explosive move we just witnessed. Think about it this way. Does Apple stock go straight up forever? Does Nvidia? Does anything? No, markets need to breathe. They need consolidation periods where weak hands get shaken out and stronger, more committed investors step in. And that's exactly what's happening right now in silver and gold. The short-term speculators who jumped in for a quick profit, they're bailing out. And you know who's replacing them? Long-term holders who understand the fundamentals and aren't fazed by daily volatility. This transition is actually healthy because it establishes a new price floor, a new normal, if you will. But here's where it gets even more interesting, and this is something that should calm your nerves significantly. Let me take you back exactly 1 year from now. 1 year ago, silver was trading at around $31 per ounce. Gold was sitting at approximately $2,600. Now, even after today's brutal sell-off, silver is still above $70, and gold is hovering around $4,300. Do the math with me here. That's more than doubling for silver and a massive gain for gold in just 12 months. From that perspective, does today's drop look like a crisis or just a bump in an otherwise incredible upward trend? I think you know the answer. Sure, it hurts emotionally. Nobody likes watching their investments drop. But reality and emotion are two very different things. And reality says we're way, way ahead of where we were. The broader trend is undeniably up. Now, I've been seeing all sorts of wild rumors circulating online, and I need to address these because some of them are pretty explosive if true. There are claims that a major bullion bank required a bailout. People are saying the Federal Reserve had to inject massive amounts of money through repo operations. There's even talk that JP Morgan, which has been famously short silver for years, suffered huge losses and might now actually be net long on silver. Imagine that. JP Morgan, the biggest silver shorter, potentially flipping to the long side. That would be massive. But here's the thing, and I want to be completely honest with you. These claims are unconfirmed. I've seen anonymous sources, I've seen AI-generated content claiming secret meetings among major financial institutions, people saying silver prices are being artificially set behind closed doors. Look, it's intriguing stuff, and I'm not saying it's impossible, but we need verifiable evidence before we start treating these narratives as fact. What I will say is this. There's clearly stress in the precious metals markets right now. Something is happening with banks and their derivatives exposure. The signs are there, but we need to separate confirmed facts from speculation. And right now, a lot of what's circulating is the latter. Still, where there's smoke, there's often fire, so I'm watching this closely. But here's something that is confirmed, and it's actually one of the most bullish signals we've seen in years. New York Life, and let me emphasize this, the largest life insurance company in the entire United States, managing nearly $1 trillion in assets, has now officially recommended that investors allocate 5 to 20% of their portfolios to commodities, including gold and precious metals. Let that sink in. We're not talking about some fringe newsletter or a YouTuber with a gold bug obsession. We're talking about the biggest mainstream financial institutions in America telling their clients to buy precious metals. And they're not alone. Morgan Stanley has issued similar guidance. This is a complete paradigm shift. For decades, precious metals were viewed as fringe investments, something for conspiracy theorists or doomsday preppers. Now, the biggest institutions on Wall Street are recommending them. That kind of endorsement doesn't happen because of short-term price action. It happens because the fundamentals are undeniable. These institutions see what's coming, and they're positioning their clients accordingly. So when I see a day like today, and I see institutional backing like this, I'm not panicking. I'm paying attention. Now let's talk about China, because what's happening there is absolutely fascinating and might be the biggest part of this story that Western media is ignoring. Physical silver in China is trading significantly higher than the paper prices we see in New York or London. We're talking about a 10 to 15% premium. Silver on the Shanghai Gold Exchange is commanding prices that dwarf the LBMA and COMEX spot prices. Why? Because there's a massive disconnect between paper silver and physical silver. In the West, most silver trading happens on paper, futures contracts, ETFs, derivatives. But in China, they want the actual metal. And when you want the physical metal, you pay more. But it gets even crazier. China is reportedly experiencing backwardation in silver. Now, if you're not familiar with that term, let me explain. Backwardation happens when the spot price, the price for immediate delivery, is higher than the futures price. Normally, it's the opposite. Normally, you pay more for future delivery because of storage costs and interest. But when backwardation occurs, it means people are willing to pay extra to get the metal now, not later. That's a huge red flag that supply is tight and demand is overwhelming. People don't pay premiums for immediate delivery unless they're worried they won't be able to get it later. And here's the kicker. China is about to implement export restrictions on silver. They're tightening the screws on supply even further. Some analysts are even speculating that geopolitical maneuvering in South America, where much of the world's silver is mined, is tied to strategic competition between the United States and China. Now, I'll admit that part is more speculative, but it's not crazy. Silver isn't just a monetary metal anymore. It's a strategic industrial resource. It's essential for solar panels, electronics, electric vehicles, and military technology. China knows this, the US knows this, and the competition for resources is heating up. So when I see China hoarding physical silver and restricting exports, I don't see a market that's falling apart. I see a market that's getting tighter, and tight markets eventually mean higher prices. But let's zoom out even further, because history has a way of repeating itself, and if you know the patterns, you can navigate this volatility with confidence. Jordan Roy Byrne did an analysis comparing the current silver rally to previous historic rallies, 1967, 1975, 1978, and 2010. And guess what? In every single one of those rallies, there were massive pullbacks, sometimes multiple pullbacks within the same bull market. Silver would shoot up, then crash down, then shoot up even higher, rinse and repeat. Volatility isn't the enemy of a bull market. It's a feature of it. In fact, if we weren't seeing these wild swings, I'd be more worried because that would mean the market is dead.
This volatility tells me there's real money flowing in and out, real emotions, real speculation. That's a sign of a living, breathing market. And if history is any guide, we're nowhere near the end of this rally. I remember listening to Keith Neumeyer, the CEO of First Majestic Silver, talk about the bull run from 2001 to 2011 when silver went from under $5 to over $50. He said that throughout that entire decade, investors repeatedly thought the rally was over. Every pullback was treated like the end, and every time they were wrong. Silver would consolidate, frustrate everyone,
and then explode higher. If the current rally even remotely resembles that pattern, we could be looking at much, much higher prices ahead. Now I need to address the elephant in the room. Manipulation. Look, I'm not a conspiracy theorist, but the manipulation of precious metals markets is not a theory. It's a proven fact. Major banks have been caught and fined for rigging gold and silver prices. This happened in court. It's documented. So when people say the markets are manipulated, they're not wrong. But here's where I differ from some of the more extreme voices out there. Not every pullback is manipulation. Sometimes markets just do what markets do. After a massive rally, profit-taking is natural. Consolidation is natural. Over-leveraged speculators getting liquidated is natural. So while I absolutely believe manipulation has occurred and probably still occurs, I don't think today's move is solely because of some evil cabal pulling strings. I think it's mostly just normal market behavior after an accelerated move. And honestly, that's actually better news because normal market behavior is predictable. Manipulation is not. So let's get back to the fundamentals, because at the end of the day, that's what matters most. What are the fundamental reasons to own gold and silver right now? Let me count them. U.S. national debt is skyrocketing. We're talking about numbers that are almost incomprehensible. We just keep adding trillions with no plan to pay it back. Currency debasement is ongoing. Every time the government prints more money, your dollars lose value. That's not a political statement. That's just math. Inflation is persistent. Yeah, they tell us it's under control, but anyone who buys groceries or pays rent knows that's nonsense. Prices are still way higher than they were a few years ago. Geopolitical instability is everywhere. Wars, tensions, uncertainty. All of that drives demand for safe haven assets like gold and silver. And then there's industrial demand for silver specifically. It's used in so many technologies that are only growing. Solar energy alone is consuming massive amounts of silver, and that trend is accelerating. So when I look at all of that, I don't see any reason to panic over one bad day. The forces driving precious metals higher are still in place. In fact, they're getting stronger. Even in the best case scenario, where everything goes perfectly for the economy, the US dollar loses purchasing power every single year. That's built into the system. And let's be real, we're not in the best case scenario. We're in a situation where the pace of currency debasement is likely to accelerate, not slow down. So here's my final take. And this is where I want to get really practical with you because I know some of you are sitting there wondering what to do next. Should you buy more? Should you sell? Should you just hold and hope? Let me give you the strategy that has worked for me over 25 years. First, use dollar cost averaging. Don't try to time the market. Don't go all in at once, and don't panic sell everything at once. If you believe in the long-term thesis, which I do, then you buy consistently over time. That way you average out the volatility. Second, avoid emotional decision-making. I know that's easier said than done, especially on days like today when the charts are blood red and everyone's freaking out. But emotion is the enemy of good investing. When you make decisions based on fear or greed, you almost always get it wrong. Third, expect volatility. If you can't handle big swings, then precious metals might not be for you, and that's okay. But if you're going to be in this market, you need to accept that days like today are going to happen. They're part of the journey. And fourth, focus on the fundamentals, not the headlines. Headlines are designed to generate clicks and emotions. Fundamentals are what actually drive long-term value. The fundamentals for gold and silver haven't changed. If anything, they've gotten stronger. Look, I get it. Today stinks. Watching your portfolio drop is never fun. But pullbacks like this serve a purpose. They shake out the weak hands, the people who are only in it for a quick buck, and they make room for stronger hands, the people who understand the bigger picture. That strengthening of the investor base is actually bullish because it means the next leg up will be built on a more solid foundation. I've seen this movie before. I watched it in the early 2000s. I watched it in 2010, and I'm watching it again now. And every time, the people who stayed calm, stayed disciplined, and stayed focused on the fundamentals came out ahead. The people who panicked and sold at the bottom, they regretted it. So where do we go from here? Honestly, nobody knows for sure. Maybe we bounce back quickly. Maybe we consolidate for a while in the 60s or 70s. Maybe we dip lower before the next leg up. But here's what I believe. The long-term trend is up. The fundamentals are strong. The institutional endorsement is growing. The physical markets are tight. And history shows that bull markets in precious metals are volatile, but ultimately rewarding. So I'm not panicking.
I'm staying informed, I'm staying disciplined, and I'm staying optimistic because despite the short-term pain, despite the scary headlines, despite the ugly candles on the charts, I believe the future for gold and silver is bright. The global economy is in uncharted territory. Debt levels are unprecedented. Currency creation is out of control. And in that environment, hard assets like gold and silver aren't just investments, they're insurance. They're a hedge against the chaos. And as more people wake up to that reality, as more institutions start recommending allocations, as more countries like China hoard physical metal, the demand is only going to increase. And when demand increases against a supply that's getting tighter, prices go up. It's that simple. So yeah, today was rough, but it's not the end of the story. It's just a chapter. And if you can keep your head while everyone else is losing theirs, if you can stay focused on the big picture, if you can resist the urge to make emotional decisions, then you're going to be just fine. In fact, you might look back on days like today as buying opportunities. The metals are on sale and the fundamentals haven't changed. That's how I'm choosing to see it. So take a deep breath. Turn off the noise, remember why you invested in precious metals in the first place, and trust the process, because the bull market isn't over. It's just getting started, and the best is yet to come.